All right, hello everyone. Welcome back to the channel. It's been a while, but we're gonna start uploading again consistently. Today we're going to be doing a backtesting video. So first, I'm gonna review the strategy and just go over some general tips that will help. Switch out some vocabulary, and then just in general, like going into the day, how you should view the market. So to begin with, the market moves from liquidity to liquidity and along the way through imbalances. So what that means is we move from, for example, a London high to an Asia low. And along the way, we move through that imbalance that was created, such as for value gaps, and there will be noise along the way. But yeah, that's what that means. We move from point A to point B. So some vocab to know: liquidity, key levels, targets, drawn liquidity. Drawn liquidity is liquidity, but I just included that so there won't be any confusion. These are all the same thing. Or sorry, they're not the same thing, but they act the same way. So highs and lows, session highs and lows, LR, data wicks, intermediate highs and lows. Those are all liquidity, key levels, targets, draws on liquidity, and fair value gaps aren't liquidity, but they're key levels, targets, and draw on liquidities. And the only thing I'm covering is fair value gaps in terms of PD arrays, since I don't use order blocks or rejection blocks. And just some notes. We use all of these as areas to trade to and from. And most models are built off of the same concepts, which is this. And nothing new. This is nothing new. It's just everyone's own interpretation of the market. So going to the day, I see the market as I go into the day seeing the market as, oh, what areas are we delivering from, or what areas are we delivering to? And that's just a good narrative to have when going into the day. So we have 5 minute for value gaps, everything I listed. Just it's the same thing throughout. We deliver from the same thing as we deliver to the same thing. So it's just depending on the context, how you frame your liquidity, key levels, targets, etc. So framework, the first thing we do is reach a key level. And the reason for that is orders rest there in those key levels, which allows us to be a part of moves. And those moves are usually like moves with a lot of volume that institutions go into. Displacement candles, they tell us that there's a sufficient amount of orders to take us towards the next strong liquidity. And IFEGs or CISD, there's our confirmation that we want to go towards those strong liquidities. And lastly, TP at the next key level. So key levels can be a point of reversal, which is why we TP at the closest one. So for that last one, excuse me, there was a London high, and then right below it there's an Asia high. You would take TP at the Asia high unless you have really strong conviction for that London high. You would take TP at that Asia high, since us as ICT traders, we don't exactly know how many orders are at each key level. So that's how you take TP at the closest one, since that could be your point of reversal there. And then we end up never reaching that London high. But order flow and like those things, book map, or it's called, you could see those things, but us as ICT traders, we don't know that. And trade ideas are formed through if-then statements. So I use if-then statements, constantly setting conditions for myself to determine where we want to go to next, and it just helps me have a stronger conviction for my trade. And lastly, this is no different than ICT concepts and understanding. Any inverse fair value gap model, PB trading model, MEC model, etc. They're all built off this structure, this framework, where we reach a key level, we have an inverse fair value gap, and we TP at the next key level. So for example, the MEC model, we hit a high and we target a 5 minute fair value gap if we react from that. And that's what that means. So that's what I mean by that. Is all these models are built off of these concepts right here. And just so this overall framework. So yeah, this is good to know, so you won't have to limit yourself towards one model. Obviously, of course, you follow one model. It does keep things more simple. You know, master one, jack of all trades, master of none. However that goes. So yeah, this is just another way to frame the market narrative. It helps you better understand these concepts and models. And if you guys would like, I could also go more in depth in the framework and why all these things work the way they do. And this is just very surface level. I try to keep it short, but yeah. And lastly, discretion is everything. We don't pattern trade around here. We don't pattern trade around here. Even if our setup does present itself, if there's no context behind it, if there's no drawn liquidity, or if there's something preventing us from going there, we don't take those trades. That's where you build up your own discretion towards trading. Yeah, let's get started. So let's create a session. All right, we'll do NQ ES. I'll put the date of this video. 6-7. Oh my god. So 6-7 BT backtesting. And random date, anything 2022 or higher. 2021, 2020, 2025. All right, that's fine. Wait, what? This is December. Let's recreate that. All right. Thank you and yes. Come on. All right, 331. All right, so remove everything. Let's go to 930. All right, so the first thing I do is mark my key levels for the day. That's where areas that we can react from are. So this daily fair value gap or 4-hour high. Let's see. This New Year low all the way down here. I don't think we'll reach, but all right, we have this 30-minute fair value gap. And we have this hourly intermediate low, or this 30-minute intermediate low. All right, so we just wait and see till we reach a key level and then see how we react. As well as having on SLR down here, which is good. So I'll just mark that. All right. So let's see what happens going into the day. Wait, this is at 9:30. Okay, let's redo that. All right. Hourly, we have our London high. We have our New York low. Asia low. And we have this low down here. This 30-minute right here. So let's just see how we react from these key levels. Wait for us to reach a key level. And then we'll take our trade. Okay, so we hit this key level right here. This 30-minute fair value gap. Let's see if we get a strong reaction. And we also have to ask ourselves if we have any liquidity lower. We do, which is our next key level. So let's see if we can take a trade here. Okay, we edge that unless ES took it. ES hasn't taken it yet. All right, so the reason we don't take this long right here, because we haven't reacted from this from this key area yet. We should have swept this. Instead, we left equal lows. So yeah, let's just see till we reach the next key level. Okay, we end up reaching this 15-minute fair value gap. There's a 5-minute fair value gap right here. So I would wait to see if this 4-minute inverses to take our short. And we'll probably target the equal lows instead of this 5-minute. All right. All right, that's our trade entry. Then stop loss at the protected high. And we'll target the equal lows, as could be our next point of reversal. And then we'll break even at the 5-minute fair value gap, since we will end up reaching here eventually. So what's the narrative for this trade? We hit our key level, which is the 15-minute fair value gap, and we got a strong reaction off of it. So we got our displacement candle, and we got our inverse confirming to us that we want to go lower to at least this 5-minute fair value gap. And that would be our break even, just because we're trying to get a 1-to-1 and have pretty strong conviction towards the equal lows. And you could hold runners as well towards these draws down here. I'll do that just to show you guys. But yeah, that's the narrative for this trade. One contract. Okay, that's our break even since we hit the 5-minute. We do eventually end up reaching there. The reason I broke even here is because I wanted to see us just flush down. The reason this probably happened was because we were about to reach 10 a.m., which does end up manipulating. So yeah, that's the reason for that. Or that's what I believe the reason for it to be. But yeah, pretty good trade if you did end up holding a stop loss. Maybe we could find a reversal trade here towards the next strong liquidity, or towards the next key level. For the sake of the video, we'll use key levels. So let's see if we get a reaction from this. If not, then we'll target our next target lower would be, sorry, I can't find my marker. Would be this hourly fair value gap. What is this bunched up right here? Yeah, this will be our next target. All right, so just wait to see what happens. Is this 5-minute fair value gap? All right, so let's see what kind of reaction we get from this. Okay, we hit the 5-minute. Looks like we got a pretty strong reaction. We ended up inversing it, but where do we want to go to? Okay, we hit this 15-minute fair value gap. So let's see if we get a reaction from this key level. Then our target will be the low down here. Okay, so we ended up going higher. Where to? Next target higher would be up here. And this height. If we want to take a trade up to here, in my opinion, we would have to wait till this high is broken, since it could be protected. So I would just wait. Okay, ended up breaking. So now let's see if we can find a continuation towards that. Okay, we hit this key level. Let's see if we react. Okay, it's 11 already. But yeah, that's the premise of this. It's just reaching a key level. Excuse me. Excuse me. Seeing how we react from the key level, and that will tell us if we want which key level we want to go to next. So going to the day, what are our targets? We had this previous day low, as well as the New York AM low. We have London high up here, Asia high, previous day high, and we still have this hourly gap. So yeah, these will be our draws. And if we do want to end up rebalancing the range, I have this hourly here. We'll do this 30-minute. All right, so let's just see how we react. There's also this 15-minute. Okay, we're shooting up, meaning the draw is higher, or the key area we want to tap into is higher. So in this 30-minute, if we were to go higher, where to? This hourly high, this hourly for value gap is next. Alright, so let's just wait to see what happens. Alright, we're shooting out. Okay, so we hit our London high. Looks like we didn't get a reaction off of it, so the draw is higher. Okay, we do end up getting a reaction off of it. Let's just wait and see. Nothing clear. No target that I'm seeing that's clear to me. Okay, we have Asia high above. The thing is, I would want to take a trade towards this Asia high, but I'm scared that this high will be protected. But the jaw is strong. See what happens. I would fade this, and we just kept expanding too. Okay, that was a good fade. Okay, horrible PA. Oh, so like for example earlier, so this is a perfect example. We have Asia high and London high right here. If you're to take, I didn't notice this till later on, this trade till later on. That's why I didn't take it. If you're to take this 5-minute, cont right here. So you're to take this 5-minute cont after the inverse. You would target the London high as your next target, because we don't know for sure if we want to go towards the Asia high above. So like something like this would fail, you know? We want to target the next key level, not the... And you could hold a runner absolutely towards this one up here, but that's just an example of what I want to show earlier. What I was trying to explain earlier. Alright, next day, 4 hour. Anything lower? Let me go towards the weekly, since it looks like we're reaching weekly levels. Okay, weekly low. Alright. So what do we have? This New York AM high, this London high, and this previous day low. So just see how we react from these key levels. And this 30-minute gap. Yeah, let's just see. Okay, we hit New York AM high, so we get a reaction. We do get a strong reaction off of that. So it'd be our next target. Would be this 5-minute for value gap. This is honestly an easy trade right here. We go for a 1-to-1. And we could break even right away at the 5-minute gap once we touch it. So we hit our key level, which is this New York AM high. And we got a strong reaction off of it. Telling us this was enough orders filled. Sufficient orders to take us to at least this 5-minute fair value gap right here. So yeah. Or you could also hold towards here. Let's see if we could leave a runner. And then 75% of it we could scale off at a 1-to-1. Let's see what happens. Okay, that's their break even. Okay. Did we ever reach a 1-to-1? No, we never reached it. Alright. This is actually like the perfect trade opportunity here. This is a bit of a late one. Sorry, guys, but I need to take this. So what ended up happening here, so we got our reaction from this key level, went lower to at least this 5 minute, and this 5 minute allowed for a retrace, but we never ended up breaking this high, meaning that our draw is lower and we do want to target this weekly low, or this low down here. And there's this 15-minute fair value gap along the way that you could break even at. Yeah, it's a pretty textbook trade. All right, we can target the low, and then our break even will be at the internal low. Since if we tend to stall, if we stall at this break even point, that's telling us, oh, okay, maybe our trade idea is failing. We don't want to go towards that direction. But I do like this trade. Same thing. We're still reacting from the same key level. We reacted from this 5 minute key level, got a retrace, but it wasn't enough to break through here to take us to this London high, or whatever high it was. Yeah, London high. So yeah, so this is still valid. This key level is still holding. All right, let's see what happens. Okay, we end up wicking it. Weird as fuck. All right, break even point hit. 15-minute hit. So this is a 1-2-1. You just go most of it here. Not yet. We'll wait. Okay, that's a 1-2-1. So you can scale most of it. Well, not even, because this candle's up here. Okay. So hold the runner. Or you could fully TP right here at the 1-2-1. Yeah, so we can scale most of it, 75%. Why isn't it letting me scale it? Alright, that's weird. That's not letting me scale it. Yeah, let's see if we deliver. Alright, eventually we do end up delivering. But yeah, that's how the framework, that's the framework. We just hit a key level, see how we react from it, and we get a strong reaction. That's telling us that the jaw's lower. We could tell from these inverse fair value gaps. So yeah, next day. Let me change the song. Alright. So where are we at right now? So we're heading towards this weekly low. All right, so key levels, key levels, key levels, key levels. So we have, this is a really strong expansion. This is crazy. London low is like 500 points away for prices right now. So that probably won't even be a valid target. All right, this New York low, New York high. All right, see how we react from these key levels once again. And this is LR leading up to the New York low. Looks like, yeah. All right, see what happens. Okay, we hit the New York low. We do get a reaction off of it. But is there a draw lower that I'm confident in? There's this New York high, right? But the thing is, it's in this hourly. Now it's used to take us lower. So I probably wouldn't use that as my target. 5-minute intermediate high. We'll see. We'll wait. Let's see if there's more structure. Okay. Why do I like this? Why don't I like it? So we get the 1-minute inverse, or we don't get it just yet. Alright, let's just say if it was a 1-minute inverse. This would be the trade idea, right? And then Stop loss right here at the protected low. And target this. So why don't I like it? It's because of this high. And this high is pretty protected. Because it's the high that we hit up here to take us lower. Why do I like it? Because we got a strong reaction from this key level down here. Yeah, but looks like we're kind of stalling a bit right here. We'll give it a try. It still looks like strong delivery. Break even at this internal high. I mean, we did dump like 500 points. So it'd be good to rebalance the range as well. So yeah, we'll give it a try. And we can't target this 5-minute just because it wouldn't be a 1-2-1. And I do want my stop loss right here where it would be protected. So let's just take this. All right, break even point hit. All right, well that saved us from a loss, which is good. So this is telling us the draw is lower and that this is protected. All right. Okay, so we're reacting from this 5-minute for value gap right here. I kind of like this. We're reacting from this 5-minute, so that's our key level. And would be the next target, the next key level should be this low. Inverse, if we get an inverse, not even a 30-second. All right, we just had to wait here. But yeah, this would have been a trade, something like this. If there was an inverse here. Yeah, the trade would be something like this. We hit a key level, next target, the next key level. Maybe we react from here, let's see. We do get a strong reaction. Holy. Maybe we could try to take along here. Excuse me. Alright, I had to stretch really quick. Alright. Let's see if we get this inverse right here. Okay, we get this 4-minute inverse, looks like. Alright. Like this. Alright, so 11 a.m. candle is definitely going to open higher. Just because the slow is protected for sure. Alright, so we hit this key level. We got a strong reaction. And we're going to target the 30-minute that's about to form or the 15-minute. And you could also leave runners towards this high. Since we could want to rebalance the range, sorry. So yeah, let's take this. And then break even. Look at the 1-minute. Break even would be at this high. We shouldn't stall at this internal high. Alright. Let's see what happens. Okay, we open higher. Nice. We scale most of it at our 1-to-1. So we'll scale most of it right here. Okay. 75%. How do you guys know how to fix this? Like, why isn't it scaling most of it? 75. Oh, there we go. And then the runner can be left towards up here. I'll just put this right here. All right, so looks like we got, that's good. We got our 1-to-1. I wonder if we do end up delivering. Dang, we don't. All right. That's how we TP at the next key level. But yeah, I just want to show that you could take runners on next day. Man, we're just dumping. This weekly low right here. We are target. Weird ass day. Alright, key levels. Alright, and then just a reminder, key levels, targets, liquidity, all the same shit. Just used in different contexts. So I'll mark the end of this gap. We have London low. Excuse me. We have New York high. Any gaps? Sourly gap right here. Excuse me. 15-minute intermediate low. So see how we react to these key levels. Okay, we hit this area, so we get a reaction. Okay, we do targets. 15-minute for value gap as our target. So we got a reaction from this intermediate low. And do we get our inverse? We do get an inverse right here. A bit high up, but it's okay. All right, the 15-minute. Yeah. And of course, you'll leave your runners higher up. Just do that just to show it. Oh, break even. Break even at this internal high. Okay, so we scalp most of it. 75%. Why is it doing that? The fuck? Alright, that's weird, whatever. But yeah, it could definitely be runners. You see bound, slam dunk. But yeah, I'll do one more trade. And we'll call it a day. Alright, we'll target this data wick, it looks like. Jaws. Or key level, sorry. This hourly gap right here. Asia low. And then the data wick. And it's 15-minute as well. Alright, let's see what happens. Okay, we hit our key level. We do end up getting a reaction. We get this inverse. It's kind of shitty. This volume is kind of shitty. It's really wicky, so I'm gonna just fade it. We definitely could take this. We reacted from this key level and we're going lower. Or two down here. I would wait to see if this is broken before taking a trade lower. Yep, and that's why. So then, knowing that this is protected and you get a reaction off of it, that tells us that the draw's higher. I would take this trade, target the data wick, and then break even at this high because there should be no stalling. We shouldn't be stalling right here. Kind of shitty PA too, so it needs to be a really quick break even. We have a bunch of wicks. All right. Let's break even. I'll wait one more candle. All right, yeah. Look at those wicks. Like, what is that? All right, break even now. We shouldn't stall at this point. Should just flush over there. Come on, don't edge it. Okay, we're stalling a lot, so I'm gonna just trail this. Alright, good thing I trailed it, because that's insane that we stalled for that long. Maybe ES ended up taking it. I haven't been taking note of SMT, but oh yeah, okay, we got an SMT here. So we could have scaled most of it. But yeah, that's basically the strategy. That's what most strategies are built off of. Just seeing how we react from a key level. If we get displacement and inverse, strong reaction tells us we want to draw higher up or lower. And yeah, if you guys want a more in-depth video of all these concepts individually, and this is me putting it together, but if you guys want to better understand everything, I could definitely make a video on that. But yeah, hope you guys enjoyed. Yeah. All right, guys, I had shut off the recording, but I forgot to show the analytics. So we have 4 wins, 3 break even, 100% win rate. Here it is, Thursday, Friday, Monday, and Tuesday. All right, so hope you guys enjoyed. Let me know if you have any questions, comments. It's useful for me as well. If you guys have anything I could do better, like something to improve my trading, I'm always open to that. Why wouldn't you want to be a god trader? Yeah.